Well, good morning, everybody, and welcome to another Fintech Nexus webinar. We have a great topic today, one of the most important topics, I think, in all of fintech, and that is identity verification. How do you know your customer? How do you prevent fraud with biometric identity verification? We're going to be talking about that. We're going to be talking about all kinds of things when it comes to identity verification and fraud, and we have an esteemed group of experts here to discuss this. But first, let's do some introductions. My name is Peter Renton. I'm chairman and co-founder of Fintech Nexus. I'm going to be your moderator here for the next hour or so. Now I'm going to hand it off to our other panelists. And Domingo, why don't you do a quick intro?
Hello, everyone. My name is Domingo Guerra. I'm the Executive Vice President of Trust at Incode.
Okay, Georgia.
Hi, everyone. Georgia Felty. I'm the product portfolio manager of our risk and compliance platforms at Customers Bank.
Okay, and Ian.
Hi, everyone. I'm Ian Dare. I'm the head of financial crimes compliance and BSA officer at Affirm.
Okay, so we have a bank, we have a fintech, and we have a fraud provider. And I should also mention this is sponsored by Incode, so thank you very much for that. Domingo, why don't you just kick us off, if you would, on, giving us a bit of a lay of the land. How has identity verification changed over the last few years?
Yeah, so ID verification originally used to happen in person. Obviously, you go to a bank branch, you show your ID, someone looks at that ID and confirms that you are the right person in that ID. The original ID verification industry, the first movers, their innovation was just being able to do that remotely. So it still went to a human to review, which again, humans can be slow, biased, error prone, not really scalable. But for a while, that was what the early movers in this space did. Over the last few years, we've seen a wave of new innovation coming in with more computer vision, to now the third generation of solutions are doing machine learning and AI to verify users' identity really at the speed of technology, at the speed of these mobile devices, without having to go to overseas for human review. So really a lot of the innovation has come in the last few years about creating more accurate, faster, and better user experiences to have high confidence and do remote ID verification.
And we are going to get into those innovations here throughout this webinar, but maybe we can actually talk about what's being done today. Georgia, why don't you walk us through your KYC process at Customers Bank?
Sure. So here at Customers Bank, we have a product that we developed in-house. It's integrated into various third-party data sources, and it acts as an orchestration layer to support all of our various KYC and KYB models. Depending on your entry type into the bank, your risk appetite in that product, and all of the elements that are received within that application, we run very specific models for KYC. And then we embed that into the application flow. So it's a seamless API, single API behind the scenes to our platform. Our KYC process not only includes the standard CIP elements that you would expect, address verification, date of birth, name, but we also do fraud verification as well. So we'll look into your email, your phone number, the device that you're coming through on, and then we'll wrap all of these into one decision, and we'll display that back to the application.
And just to be clear, as of today, you are not using biometrics in your KYC process.
Correct. Today, we're not. It is definitely something that's on our roadmap, but today we are not including biometrics.
Okay. And what about at Affirm, Ian? Why don't you share how your KYC process works today?
Yeah, I think a simple but relevant example is when someone wants to use Affirm as a payment option. So say I want to buy a TV and I'm online and I'm at the point of checkout. That's when they begin to engage with Affirm. And that's when the KYC processes start. We do perform fraud checks, email, and some other information. But we also, of course, require the user to directly enter their CIP information, and then we check that against external data sources. If it matches, then they're good to go. They can continue with their purchase. If it doesn't match, then we have a step up and some additional information is required.
Right, and we'll talk about that more in a little bit. But obviously, for the firm, you know, you've got at the point of sale, you know that this needs to be an efficient process, right? Because like you could lose a sale, your customer could lose a sale if you really make it too difficult.
Yeah, absolutely. Yeah, and friction is a major concern for us, because we're at the point of sale, and obviously, people just want to make their purchases. They don't want to be standing in a virtual line or jumping through a bunch of hoops just to for example, buy their TV.
Okay. So then, Domingo, what are some of the best practices here when you're looking at KYC, and maybe you can bring biometrics into the equation now? What are some of the ways that your clients are using this?
Yeah, as Ian mentioned, friction is a very big concern. So the best practice is going to be, what's the fastest way to verify someone and gain confidence that they are the person that we want to do business with, or provide a loan, or open an account, or approve the transaction, for example. So we're expecting a very easy experience for the user, very high accuracy and confidence from the security, compliance, and fraud side, as well as minimizing the data required, and having the best use cases or best practices around privacy, data protection, and data minimization. So a lot of it will revolve on solving the balance that used to be a conflict between conversion and fraud. We're saying we can have fast conversion and low fraud by introducing biometrics. I think that's the key takeaway from a best practice perspective.
And so then, what with Customers Bank Georgia, what I'm curious about it sounds like you built something in house. You're not using biometrics today, but you don't have the problem that Ian has at Affirm, where, I mean, obviously friction's important for anyone, but like, you don't have to. If someone's doing an account opening process, there's going to be an expectation of friction, right? So, maybe I'm curious to know why you're not using biometrics today, and you said it's on your roadmap. Is it just you haven't got around to it yet, or what are your thoughts there?
Yeah, so it's definitely on our roadmap, and you're right. Adding friction in opening a bank account is probably a little different than adding friction at the point of sale. It is almost an expectation when you're doing a digital onboarding for a bank account. We are firm believers in biometrics. We do think that it's the leading way to combat fraud in a digital space, not just in onboarding, but life of account. Historically, we've just relied on other methods and sent our customer flow to a manual review if we weren't sure. We find that it is a process with us to actually implement biometrics. We have a mix of technology, from legacy tech to new vendors to tech that we built in-house. And the onboarding flow touches every piece of this tech. So in order to introduce biometrics, we really need to upgrade a lot of our systems to be able to handle this new vendor or new solution that we're going to introduce. And so I would say my advice to anybody out there who's thinking about wanting to use biometrics, even if it's not on your roadmap right now, it's 6, 12, 18 months out, is to start thinking about it and socializing it with your peers inside of your organization, so that you can understand what pieces of technology are going to play a role in it and where the heavy lifting is going to come into it, so that when you're ready, you're not surprised by some of these other pieces of tech that are going to need to be upgraded in order to support it.
Yeah, it's a really good point, because it's no point having a state-of-the-art system if it's going to take a huge amount of effort to, like with some of the legacy technology, it makes it more challenging. So maybe, Domingo, you could sort of talk a little bit about that. Like you have a variety of different clients, right? Including some with legacy technology, I'm sure. How are you kind of getting around that?
I think that's a great question, Peter. We've had to be very nimble and very easy to work with because our clients sometimes have either legacy systems or they had M&A and they have different systems in different parts of the bank, for example, or different silos of information that normally share. I think as users, we've seen sometimes that kind of frustration where maybe we have a mortgage with a bank and we try to open a car loan or a credit card loan and we have to go through verification again because sometimes the institutions are not well connected internally. Whereas by bringing this type of technology, besides solving the issue on verifying users, sometimes we've been able to connect those previously disconnected silos of information by giving access and bringing the system more like an identity platform than just a KYC solution. It enables to break those walls or those silos and connect those sources of information. Where now you can have maybe credit monitoring risk or fraud risk or device and behavioral risk. You're bringing all those sources of information, all those signals into the decision process and automating that with approving a user for account onboarding. But as Georgia mentioned, for the life of the user, maybe for attestation, for changing passwords, for making a high value wire transfer or a high value transaction, you can just take a selfie and get that confidence in an instant. So I think it's being able to be flexible to work with the partners and work with our customers where they are and integrating into any solution that they were using previously to help modernize.
Right. Okay, so Ian, you talked about doing biometric identity verification with step-ups where there's something's happened where you're not 100% certain that this person is who they say they are. What I'm curious about sort of the use case there, like how, obviously you want to get people through as quickly and as efficiently as possible. So how do you kind of decide to step up the person, and then when it's actually happening, to take us through the step up process and what you actually do there?
Yeah, so if in so many words, if the information doesn't line up, something just isn't adding up, and it's I can't disclose the exact procedure, but if the majority of the information isn't lining up, but there's still enough to suggest that it could be this person, then there's a step up. And we decided to go with biometric step up because we had a level of confidence that could really make the decision for us. In the sense that the other data that we had didn't really line up, then biometrics could be much more reliable. And so that's what happens is there is a step up. It'll still be at the same time at the point of checkout, but the user has to go through the extra step of providing the biometrics, and assuming that checks out, then they can proceed with their purchase.
And is that typically like taking a selfie and then driver's license, or like obviously it's on a phone, you've got Face ID on a phone. How are you doing it?
Yeah, selfie with an ID. Yep.
Gotcha. Okay, so let's talk about customer expectations. We've already touched on it, but there certainly has been changes in customer expectations over the years, and maybe Domingo, I'd love to sort of get your sense on how those customer expectations have changed.
Yeah, Peter, I think for the last few years, users are used to unlocking their phones with their face, right? So that user experience, you unlock your phone maybe 10 or 20 times a day. It's frictionless, it's fast, it's much faster than typing a PIN code or a password, and it's secure. So folks expect that kind of modern, slick interface when they interact with account opening or verification, and they demand really that high bar. They want something that's fast. Users want something that's passive, and passive versus active is big in the industry, where the legacy players, to see if it was a real user, they would ask a user to look left right, up, down, and it was a pain in the neck, maybe literally from moving your head around. But now with passive liveness, you just take a selfie, and in an instant you can gain that confidence. So from a user expectation, they want to minimize the effort required. They don't need to be tech savvy to be able to verify who they are, and they need to get real-time feedback. Is the selfie okay? Did it pass? Is the ID clear? Is it blurry? Is there glare? Is it going to be accepted? The user demands to know that in an instant, and maybe even get guidance as they're taking a picture, move left, move right, or oriented the picture in a certain way. In the legacy solutions, again, maybe a user would wait minutes to find out, oh, it didn't work, I have to submit the documents again. And that frustrates users. It causes onboarding fatigue, and ultimately it causes drop off, which hurts our customers. So a lot of the effort has been on just meeting and exceeding the end user expectations of having a fast, accurate way to verify their identity and giving them the instant feedback that everything's smooth and it worked. And then we see higher conversion there.
So if you have a question for our esteemed panelists, you can hit the Q&A button. We'll get to those later on in the hour. But I want to switch to trust, and I want to talk about how we develop trust with new customers. Someone's coming in to your, like to say, listen, I'll start with you, Georgia. Someone's coming into your to the bank's website. They don't, they're thinking about engaging with you with a new account. How are you developing trust with new customers? Georgia?
Sorry. So trust is interesting. It's obviously something that's earned, not given, and that holds true in a banking relationship as well. We do a lot of due diligence behind the scenes before we have to get to a point of adding friction to a customer and leading them to believe that we don't trust the information that they're giving us. So we will really use all of the resources that we have available to us to try to prove or disprove what the customer is saying before we give them, some type of friction. And then I think when we do give friction, it's really important in customer education and how you deliver the message to the customer when you need to go back to them with some type of friction. If you tell them why you need that without divulging, obviously, your fraud strategy, I think you can turn a frustrating situation for a customer into something where the customer says, oh, my financial institution really is trying to protect my financial safety and really cares about, my safety as a customer instead of just letting this go.
Mm-hmm, mm-hmm. So, Ian, I would like the same question to you, like with Affirm, because you're obviously in a different type of organization to a customer's bank with different needs. But how are you trying to develop trust with new customers?
Yeah, it's a difficult balance because obviously as a fintech, we want to make it as easy as possible for customers to use the service, and that usually that means less friction. But at the same time, it doesn't do well for trust overall or trust in the long term if we're just onboarding anybody and everybody that signs up, and I'm sure you could imagine the fraud rates that we'd see if we did that. It's a good point that just to echo, I think what Georgia was saying is there does need to be, despite everything I've said, there does need to be some friction. We do have to ask some questions, and we do have to gather some information. I think as long, exactly as Georgia said, as long as we're pointing out why that is, and that we need to make sure that they are who they say they are, et cetera, then I think that's okay. And I think there is a level that's somewhat acceptable and that won't ruin the customer experience. And because we're doing that in sort of the bigger sense of trust and making sure that we're a trustworthy partner and trustworthy service provider.
Yeah, because even going back to that example of someone buying TV, and it might be a few $100s, $1,000 purchase. There's probably some expectation you're not just going to take their email. If they're a new customer, never seen them before, and I would like to kind of think that they would be some expectation. You'll have to introduce some friction into that onboarding process, right?
Yeah, precisely. Yeah.
Okay, Domingo, do you have anything to add about trust here?
Yeah, I think managing expectations and providing context is incredibly important. So not just saying, hey, here's a roadblock or here's some friction, but the why of, hey, we need to verify your identity to protect your account and to serve you better. And these are the steps. This will take 30 seconds or whatever the duration of the biometric check, for example. So that aligns expectations. And then obviously communicating it and providing context in terms of consent of, we're going to use biometrics. This is safe. This is how we protect your data, allowing the customer to dive in to privacy policies if they choose to, making them accessible, I think are all ways to bring trust. And finally, things that you can do technologically to protect them and their data. Saying we're not going to ship this everywhere. We can do this on device. We can do this in real time from your own device. Gives that user, again, more confidence that their data is not going to end up overseas or with manual review or something, that you're able to give them better privacy and better security.
Okay, so let's talk about red flags in the onboarding process. I mean, Georgia, what are some of the things that you see that would cause you to kind of stop your normal process? What are the red flags?
Yeah. So one of the red flags that we've been seeing a lot lately is new accounts that are being opened with a combination of a brand new email address and a voice over IP phone. I think a lot of customers or fraudsters' expectation is that if they sign up for a new bank account, they're going to at some point be presented with a one-time passcode. And the methods of delivery are either by phone or by email address. And so they'll use all of the customers or the victim's true information, but they will use disposable emails and phone numbers in the case that they get a OTP. And so one or the other might not necessarily be a red flag in itself, but when we see the combination of those two, historically, at least for us, that has always been a true indicator of fraud. And so we look at all of those cases individually, but it really sometimes spells out a more serious scalable fraud attack as well. So we track that metric. And when we see that metric start to increase, we know that we have a bigger issue going on. Another thing that we see that's a red flag is when we look at the devices, if we see multiple devices accessing one particular account, or we see one device accessing multiple accounts that might be spread out through a geographic region with no real reason why they would be accessing multiple customers' accounts. Those are some red flags where we would want to stop and introduce friction. Right now, it would probably be stop and do an outbound phone call to the customer, but you could introduce something like biometrics and have the customer right there just tell you if it's them or not.
Interesting. Ian, what are some red flags that you're seeing at Affirm?
Yeah, our foremost concern and probably foremost risk is fraud. And one of the things that we look for is, was it an account takeover? Are there certain pieces of information they're providing that don't quite add up with the profile that we have, including emails, IPs, etc. And then also synthetic identities. Are they using actually real information, but blending that with new information and sort of creating their own brand new profile and new credit report, etc. And those are hard to track down, but we do keep an eye out for those. And there are certain things that we can look for where the information doesn't add up completely. And that might be one of the areas where we would require a step up and require the biometrics.
Okay. I want to, we've talked a lot about account opening, but once you've established an account, there's still obviously possibilities of fraud. What, Domingo, maybe you could take on this one about what role biometrics should play outside of account opening.
We've seen a lot of interest and a lot of customer adoption of reusable identities or digital reusable identities. And that means let's not waste the effort that the user had to go through in onboarding. They already went through the friction one time of scanning their ID and taking a selfie. Instead of just having that a one-time thing where it only provided value for account opening, let's reuse that for sensitive changes. Like I need to change my address and have my credit card sent to a new address, or I need to change my password or my email, things that could be a red flag to the point earlier of potentially account takeover or an impersonator or someone that lost access to their account. So how can we introduce just a selfie verification before we connect to support or before we connect to the change password page can greatly reduce that. There's also sometimes where there's maybe a red flag for a different type of transaction. Maybe it goes over a certain size or a certain to a new person, a new wire, a new institution, a withdrawal that looks strange. We can introduce a selfie there. So a lot is around just verification or attestation that the user does intend to do this and they are still in control of their account. To now we're even seeing requests to just replace passwords altogether and enable face login. I think when people experience face login on their phones, they say, hey, how can I do that on this bank or on this website or on this service or on this app? I think biometrics have also been seeing gaining a lot of ground in that because of how complex passwords are to remember or to keep safe, or how difficult it's also to protect OTPs or one-time codes sent to your SMS. They could be SIM swapped, they could be taken over by someone that stole your device. So again, biometrics in the life of the account are becoming a lot more popular and a much more easier to implement for the user, while still bringing high confidence for the security and fraud teams.
Okay, so they're not like, are you hearing resistance from your customers that, or is it fairly accepted that if you have to go and change your address or change your linked bank account, that this is something that you have to go through?
A lot of times it's presented as an option. This process can take, you would have to call in and speak to a human and try to verify by the traditional method, or you can do this self-help with a selfie. So presenting that option, you also see as a way to decrease fraud, because if someone's able to verify their identity, obviously there was much lower risk there. If someone's trying to then talk to a human, then it might be they're maybe not comfortable with sharing their selfie, fine. But for the most part, that's also the route that the fraudsters are going to take, because they know they can't pass the selfie, so they're going to try and defeat the previous methods. So it just raises the awareness. It also decreases the volume of people that the support teams or the call center has to deal with. So it makes them focus more on those folks, and it's harder for the bad actors to get through.
Gotcha. Okay, we've touched on this, but I want to do a little bit of a deeper dive into balancing friction, with user experience, and I'm curious about like how in an ideal world you would catch all the fraud, but then you might have lower conversion rates, shall we say? But so how do you kind of introducing friction with risk management, Georgia?
Yeah, so definitely balancing friction is something that everyone probably struggles with. I will say, to your point of zero fraud, I don't envision any world where there's zero fraud. I think you'd have a lot of angry, good customers and a lot of attrition if you have zero fraud. So we actually find it really helpful to have checks and balances in place when we add new pieces of friction to our onboarding flow or our life of account flows. The way we do this is metrics. So we track every time we add friction, and we say, was it a false positive where we introduced friction and the customer was actually able to pass? Or was there fall off? and they did not pass. And was the fall off because it was fraud, or was the fall off because the customer is frustrated and walked away? And so prior to adding the friction, we will define what those acceptable ranges are. And periodically we'll go back and check and make sure that we're still within our accepted ranges. And if we are, then that's great. And if we're not, then maybe we need to dig in and see what the issue is and maybe change up our strategy a little bit. Or maybe we need to take a step back and look at the landscape of fraud, and maybe we need to reconsider our expectation and change our ranges for what's acceptable.
So, Ian, do you have acceptable levels of fraud at Affirm as well? And do you how are you kind of balancing friction and risk management?
Yeah, it's difficult, and I agree with Georgia. I think there's an expectation that there will be fraud. It isn't welcomed, but it's just part of doing business and being in the online digital world. Friction is a very bad word that we say in a hushed voice at Affirm, because the point again is to make it just a seamless, friendly, the best experience possible. But we, as I had mentioned earlier, we do know that some friction is needed. We have requirements that we have to follow, for example, CIP, and there's information we have to collect and questions we have to ask and information we have to gather. I think with those, there is sort of a method to the madness of when we ask, where we ask, how we ask, and optimizing that. We have ways of doing experiments with small sort of subgroups of customers to see how they might react to different placements and different processes, etc. So we try and keep an eye on that and just see what conversion looks like and see how much friction is there. It's a long way of saying that yes, there's an expectation of some friction, and there is a level that we're willing to accept.
So let's obviously you're introducing friction. You're going to have some drop off. That's inevitable. Domingo, I'd love to kind of get your perspective here on how banks and fintechs can deal with drop offs. Are these people lost forever, or how can you kind of re-engage them?
Peter, that's a great question. I think for a lot of the conversation, we talked about biometrics and onboarding, and certainly there's a lot of innovation there. But there's also been a lot of innovation in how we re-engage or reconnect with users that dropped off. In retail, e-commerce, you see maybe you left something in your cart and then you close the website. You'll immediately get an email and say, hey, don't forget to check out. And maybe a few days later, a reminder, you still have items in your cart. Here's an extra 10% discount or an incentive to go and complete your purchase. We can now do that in the onboarding as well, right? So you're minutes away from completing your credit application or your new account opening, or you're minutes away from your dream vacation. If you were buying like a rewards card or applying for something for your trip, now you can introduce that context and engage that user with just the steps that were missing. Maybe you already took your selfie, you just needed to scan your ID. We don't make you go through the whole onboarding process again. We just ask you to complete that last 2 or 3 steps that were missing, or maybe that just that one last step. So that's certainly an area of innovation that we're pretty excited to see in the market. It's just re-engaging with lost users. And then the other art is on the business intelligence side. We know that a certain percentage of users drop off. Maybe we can introduce different workflows or different flows of how to verify a user, how to onboard a user, that introduce lower friction and measure in real time, give you maybe an A/B test or ABC test. You see a little bit more fraud here, but if we know the cost of fraud on a user versus the lifetime value of a good user, we're able to then take a business decision of saying, you know what, we're going to do a lighter onboarding for most users. For these higher risky transactions or higher risk areas, maybe there we'll introduce a little bit more friction. So not try to do a one-size-fits-all approach to onboarding, but an intelligent onboarding where you only introduce friction as needed, and you live with some fraud as long as it makes proper business sense, because you're letting the majority of the good users in. So that kind of intelligence, you really need to be well integrated, obviously, with our customer, with our partner, on how to bring this data and visualize it in a way that it's easier to make those business decisions. But you also have to offer the flexibility to do multiple flows in multiple scenarios, where that's an innovation in itself. With a low code or no code deployment, you're able to make changes on the fly of how your users are going to experience onboarding and see those benefits, measure those benefits, that the small change here could maybe enable an extra few percentage points of users being auto approved. And that can translate to tens of millions of dollars a year when you're a high velocity business.
Interesting. So then let's talk about biometrics specifically. What are the advantages of biometrics over some of the other KYC tools that are out there?
I saw a really interesting study, and there's originally a lot of ways to verify a user by asking them questions, maybe from their credit report, or which of these streets do you recognize, or did you ever have a loan in this state, or things like that. And I think only 43% or something like that of real users knew those answers consistently, versus over 80% of the hackers or attackers knew those, because they've done the research, they've stolen the identity, they know what to look for when they go and do an account takeover, or when they go impersonate someone, or where they're creating synthetic identities. So I think a lot of times we're putting things that sound good on paper in terms of how to verify a user, but it makes it harder for a good user and easier for an attacker. So I think when we then think about introducing biometrics, we're saying it's not something that a user has to know or remember. Again, you can't leave home without your face. You're not going to leave this behind. It's not something that you have to be tech savvy. It's not something that you have to learn how to use, or a new technology, like receive a phone, a pin or something to your text message. It's something that levels the playing field and everyone can use. So I think biometrics have been very exciting as a tool for KYC. It's just separating the biometrics that are hard to beat. So like proper face biometrics with liveness, versus maybe folks were trying to use voice, which worked until AI came in. And now like deepfakes are pretty trivial to spoof someone's voice as well.
Okay, so then let's talk about the threats. We touched on red flags, but I'm curious, Georgia, maybe you could sort of take a step back and talk about some of the threats you're seeing to the industry, to financial services. What are some of the newer threats that you're seeing out there today?
Yeah, so we're seeing really two different types of threats. So one is a threat against the OTP, and it's basically a man-in-the-middle threat. So the fraudster will go out on the dark web and buy stolen banking credentials, your username and your password to your online banking or mobile banking. And then they will sign in, and an OTP will go out to the true customer. The fraudsters are now spoofing contact center phone numbers and calling these victim account holders, pretending that they are their financial institution, and letting them know that maybe they have noticed some fraudulent transactions on their account and they just want to validate them so that they can block them. But in order to do so, they need to have the customer repeat the one-time passcode that they received. And so the customer, out of fear, repeats this passcode, and the fraudster is now accessing the customer's account and depleting the funds from it while they're still on the phone with the fraudster, going through these fake transactions that they think might be fraud. That's one thing that we're seeing, and that's kind of one reason why OTP for us is not quite as effective. No matter how much customer education you put out there and you tell the customers, we will never initiate contact with you and ask you for the OTP when they're under duress and they feel like there's fraud taking place on their account. All of that education just goes by the wayside, and they give up the passcode in most cases. Another one that we're seeing is what Domingo touched on with the voice biometrics. Now, we don't particularly use voice biometrics, but it is something that we've looked to implement within the bank. And with generative AI, all you need is a voice imprint. So think about all of those phone calls that you receive from unknown phone numbers and you answer and all they need is a hello, is anybody there? And they have your voice imprint. Or if you have a YouTube channel or any other kind of social media where you're speaking and it's open to the public, any of those voice imprints can be taken and replicated or cloned. And now they can have access to any kind of application where voice biometrics is in use.
Interesting. Ian, threats that you're seeing out there?
Yeah, I think, and Domingo sort of touched on it. It's just the availability of data that a fraudster, if they do their homework, they can have just as much, if not more, information than the actual person. And that's one thing that we're really up against right now, is just that if we're, as part of our verification processes, relying on data, and that data can be hacked and that data can be acquired, how strong really are the verification processes? And it's something we don't have a perfect answer for, but I think biometrics is probably one of the answers.
Okay, so we've got a few questions coming in here. I do want to get to some of the audience questions. If you have another question, if you have a question for the panel, hit the Q&A button. So let's start off. What about tenured phone numbers for sale? I think new phones or VoIPs, voice over IP, is a bit dated in terms of fraud strategy and has evolved a bit as those basic signals can be detected easily. Anyone want to tackle that one?
Yeah, I can take that one. So I definitely agree. Fraud is a layered approach, and you have to have lots of different strategies in your fraud arsenal. Fraudsters are lazy, and they will take the easiest route that they can. And so we definitely see the VoIP phone numbers as an active fraud indicator, especially when combined with the emails. If you've ever tried to sign up for a voice over IP phone, they require very little CIP. So they're very easy to get and they're very much untraceable. But if you think that you have a threat to these stolen phone numbers that are for sale, definitely we do some fraud screening on phone numbers. We can look to see what type of device it is, but we can also see who that device belongs to. And if you think that the device does not belong to the customer who is signing up, you can definitely use that as an indicator for some kind of step-up authentication.
Okay, this one for you, Domingo. Someone questioning about the stat you gave. There's 43% of real users don't know the answers to the out-of-wallet questions. Do you want to know if you have a source for that, or where'd you get that number?
Yeah, it's from one of the cybersecurity studies on phishing. I'm not sure if it's the Verizon security report or another one, but I do owe you all that stat.
We will. As I said, this is being recorded, obviously, and so this will be out after everyone will get a copy of this who's registered for the webinar, and maybe Domingo, we can sort of also answer that one. Okay, moving on. How will the AI arms race challenge the precision and innovation biometrics for KYC? Interesting one. Who wants to tackle that?
Yeah, I think we discussed a little bit about AI threats on the voice side, but also on the synthetic identity side, it's becoming a big concern because they're able to put data together in a way that looks real and take real data, but just put it together in a way that's going to pass a lot of the traditional systems. On just taking an image of someone or an ID of someone, it also becomes a lot easier to fake those, where the human eye struggles with identifying a tampered ID or some change in the ID. So the traditional, even in-person verifications become very difficult. So I think as the attackers are using new technology, obviously as defenders, we have to use new technology as well and embrace AI to be part of the solution. So it's like with anything, it's an arms race. It's a cat and mouse game of there's improvements on both sides, and it's a forcing the industry to continuously improve and innovate to stay ahead.
Okay. Do you have any data on how much your conversion rate can decrease using this, biometric identification check?
So it varies by industry and by use case. Obviously, in some areas, the cost of fraud is really, really high. So they're not willing to take a chance. They will crank up the sensitivity of the technology to the highest point, and they're okay with introducing additional friction if it means that they're going to have just a really high confidence. But most industries, that's not the case. So most industries, they're going to try and find that balance of saying, what's the optimal amount of onboarding and conversion that we have with an acceptable level of fraud. So it really is highly configurable. So it's basically by industry or by customer, how comfortable they are there, and we can fine tune the technology to achieve those metrics. So I think that's the right answer, is that it depends on the customer expectations and how much conversion versus fraud they're willing to live with.
Yeah, I completely agree, Domingo. It's really finding that right balance of how much conversion you're willing to give up. I can't give out the data, but we have done some studies, and we have found that conversion rates do take a hit in our situation, where there's a step up and where we do ask for biometrics. But I think, to put a footnote next to that, you would just have to wonder how many of those that aren't converting are fraudsters, and they're just being sort of deterred at that point in the process.
Good point. Yeah, you have zero conversion loss, then the fraudsters are getting through. I mean, I feel like you want to. It's a really good point, Ian. I think that you want to have some conversion loss because you want to stop the fraudsters. Okay. Another question here. How solutions might differ for first-party versus third-party fraud? I'm not sure exactly what they mean, but what is it? Are there different solutions for those different types of fraud?
Yeah, absolutely. I think we've seen our customers implement a block list. If they've seen someone before as a scammer, as a fraudster, you can now block a face. And that's obviously an identity fraud. But sometimes there's also real people where it is the right identity, but they still commit fraud. They just don't want to pay their bill, or they claim that they didn't make a payment, or that it wasn't their transaction. And they're trying to do a payment return, or deny that transaction was theirs. And for that kind of fraud, you can also introduce biometrics of just saying, before this charge goes through, you have to take a selfie. So that eliminates not just the third-party fraud, but the first-party fraud as well, of not being able to say it wasn't a transaction that they made, when you can have maybe GPS coordinates of the device, maybe the biometric or the selfie of them doing and authorizing that transaction. And it's just another example where biometrics can help with either of those types of fraud.
Interesting. Okay. Another question here. How does KYC apply in a PayFac scenario, payment facilitator? Is there anything specific there? Maybe Domingo, you're the best to answer that one.
Yeah, similar to the previous one, we see that a lot of times merchants have to pay a higher transaction fee for card not present. If you're doing an online purchase, for example, versus an in-store purchase. But a lot of times now, they're trying to work on lowering those fees by introducing biometrics, of saying, I still have confidence that it is the right user, because I captured a biometric at the point of payment. In person, there's also a lot of innovation there in terms of faster experiences. So we work with a lot of customers in stadiums and sporting events or large events, where you can do now a facial payment, one, to reduce chargebacks. Obviously, there's a business benefit, But for the user, there's a benefit of getting your hot dog and your drink and getting back to your seat as fast as possible, of not having to take out a wallet. And you can do the payment and the age verification in one step, again, with your selfie. So your face can be your ticket, your face can be your payment, and your face can be your way of verifying that you are of age as well.
Interesting. Okay, so we've talked primarily about financial losses, but what are the other negatives for not doing KYC well? Domingo, you want to take that one?
Sure. I think a lot of it is there's risks around, obviously, privacy and security concerns. There's also risks around compliance, not meeting anti-money laundering or sanctions requirements as well. So from a KYC perspective, there's legal and compliance risks. There's obviously fraud and business operation risk. And I would say that lastly, it's probably reputational risk and privacy risk as well for the institution, for the bank, of not running a proper KYC process.
Okay, so I want to kind of, as we get towards the end here, I want to kind of look into the future. And Ian, I want to start with you. When you look at sort of the future of KYC and the role of biometrics, what are some of the things that you're thinking about?
Yeah, I think it has to do with sort of a lot of the themes that we've already covered, especially with AI and how AI can be used to perpetuate fraud. So it's really, how can we use AI for good is definitely one of the themes. I don't think I have all of the answers, but I know that that's what we need in the future, and then also moving more towards biometrics. As I mentioned, we do use them, but we don't use them in all instances. I think in the future, if we can find a more seamless way, and going back to that magic word, friction, keeping friction under control, if there is a way to use biometrics all the time, I think that's definitely in the future.
Okay.
Peter, I received the source as well for the KBA, so we can.
So I'm going to send that. I will send that out to.
But it's a HelpNet security article where it says that 92% of fraudsters passed KBA or knowledge-based authentication questions, while genuine customers only pass 46% of the time. So I was wrong with the 43, it was 46, but it's pretty staggering that the fraudsters are going to have that information, and a lot of the times the real users don't.
And I just posted that in the chat for everybody who's watching now. Can do.
Thank you, Peter.
Okay. So anyway, Georgia, looking to the future, what are some of the things that you're paying closest attention to?
Yeah, so I think as we continue to become more of a digital society, the use cases for things like biometrics continues to grow. It's no longer just for banks that have a regulatory obligation to do KYC and do it well, but as Domingo was saying, it can be your ticket, it can be your age verification, and it can be your source of funds for your hot dog and your soda or beer or whatever you choose to drink at a football game. So we're seeing it more and more throughout multiple industries. HR is using it for hiring remote workers. Commercial businesses are using it for their security access controls, and the medical industry is using it. Retail is using it heavily. So I think as more industries become dependent on biometrics, there's going to always be that investment in biometrics, and the fraudsters, we say, are always one step ahead of us. And so I am really paying close attention to seeing how biometrics can maybe close that gap and get us to be maybe only a half a step behind the fraudsters.
So, Domingo, maybe you can have the last word when you're looking to the future. What are some of the developments you're paying attention to?
I think we're very excited about reusable digital IDs. And what that means is instead of doing an onboarding every single time we open a bank account or every single time we apply for a credit card or a new loan or open a new at any kind of website, as users will be able to just log in with a quick selfie and verify that identity as a trusted identity network is formed. So in the financial industry, we're comfortable with credit bureaus, but I think as a consortium, we can create identity bureaus where we say, hey, this is Peter, and I know Peter, and I've worked with Peter before, and Peter has been a great customer for 10 years. So whenever you try to prove that you are Peter somewhere else, that knowledge can be, and that trust can be shared in an instant. And I'm pretty excited about that.
Okay, then we'll have to leave it there. I really appreciate your insights here, everybody. Thank you to the audience for watching. And also, of course, thank you to Incode for sponsoring it. Georgia, Ian, Domingo, appreciate all of your commentary here, and have a great afternoon, everybody.
Thank you.
See ya.
Thank you. Bye.
Thank you.